So do you agree with what Mr. Mishal has said about banks are not understanding the businesses?
I think yes and no, Michelle. The answer, and why I agree yes, is I think the two countries that you pointed out, post-Second World War phase, both Japan and Germany, took an integrated financial approach, which is they were not just banks, but they were also financial institutions across the spectrum of needs, particularly of companies that required both growth capital by way of debt and equity infusion. So many of the German banks were shareholders in the underlying investee companies. So I think that's an approach which is also very relevant to this part of the world, because most of the banks licensed in the GCC or in the Mivana region are universal banks. They're not just commercial banks doing pure commercial banking. Now, you can argue whether that's the real role of a commercial bank, because they take short-term deposits from customers and they are required to lend long or invest in equity. And that's where I think a group like SBI, and I must compliment SBI and CNBC for engaging with the business, financial, and of course the industrial community in this part of the world in a very constructive manner through a fairly transparent discussion on where strategically they should be positioned. And SBI, I think, is very well equipped from that perspective, because in India certainly they are present across the financial sector and not just as a leading commercial bank, which they clearly are, leaders by far. And I think that's an integrated financial approach which would very much be relevant to the kind of banking. The challenges for the SME sector is a little bit like the challenges for the post-war affected corporations in Germany and Japan, i.e. they require advisory support very clearly, because many of them are single entrepreneur or single family driven businesses. They require advice in terms of even succession planning, corporatization and the like. They require investment banking support because they need to rely on not just the banks but financial institutions in both geographies, especially if they are cross-border in their business formats. They require commercial banking, working capital support, and also term loans for machinery, supply credits, export credit, and then the like. So their requirements span across, and yet their ticket size is relatively small. So for a very large bank to sustain their interest levels would have to have a dedicated, specific approach to SME financing. And by SME, I include not just the 90-odd% that you mentioned, many of whom are in the small segment and therefore do not have audited financials or IFRS compliant reporting structures that would comfort the banks. But they also include the mid-sized companies, which are neither here nor there. I mean, they're not the large multinational corporations and therefore have the financial architecture within their companies to be able to engage with the banks very sensibly and mutually comforting levels. And so I think that's where an integrated finance approach of the kind that Michal mentioned, but which I have elaborated on, I think would be very suitable.
But to make this change, whom do you think is responsible for this? Is it the government or is it the financial institutions themselves?
Good question, Hussain. I think a large responsibility falls on the financial community themselves, the banks, etc., because many of the banks and financial institutions ought to be largely self-governing, self-regulating. There is a regulator on record. There is both the UAE Central Bank in the case of UAE and ESCA and the like. But the regulators will really bring a regulatory perspective. They want to protect the smallest depositor. They want to protect the larger financial stakeholders in the community. It's for the banks to take the initiative, to adopt such an integrated financial approach. The regulatory frameworks, especially in the UAE, but even across the GCC and the MENA region, would be very supportive, because the governments of the day are very keen to support SMEs. The governments of the day are very keen to make sure that this sector, which employs the largest workforce, which produces a very significant portion of the GDP growth in the non-governmental sector. Much of the growth in the Mivana region is largely government-driven or government expenditure or public sector companies operating. So they would want to encourage it, and I think in all my engagement with the regulators, with the central bank governors in the region, that comes out loud and clear. I think the disconnect needs to be constructively managed in a relationship between the regulator and the regulators. And I think that's where the larger banks of the likes of SBI and the larger ones should take the initiative.